The silver market is exploding right now, and investors across the world are trying to understand whether this is the beginning of a historic breakout or simply another temporary rally before prices cool down again. In a move that shocked traders overnight, silver surged all the way to $90 an ounce, creating one of the most aggressive upward moves the precious metals market has seen in decades. What makes this even more unusual is that gold, which normally rises alongside silver during periods of economic uncertainty, actually moved lower while silver continued ripping higher. That divergence has many analysts wondering whether something much bigger is happening behind the scenes. For years, silver has traded in gold's shadow. Whenever inflation fears appeared, central banks bought gold. Whenever geopolitical tensions rose, investors rushed into gold. Silver would usually follow, but at a much slower pace. This time feels different. Silver is moving independently, and that is exactly why traders are paying such close attention. The market is beginning to look less like a traditional inflation trade and more like a global supply panic combined with strategic accumulation by major nations. At the time of this move, silver was sitting around $90 per ounce after jumping nearly 3.5% in a single session. Gold, meanwhile, slipped slightly lower. Normally, when the US dollar strengthens, precious metals struggle because commodities priced in dollars become more expensive for international buyers. Yet silver ignored that historical pattern completely. The US dollar index climbed higher while silver surged at the same time. That kind of price action usually signals that buyers are no longer concerned about short-term fluctuations. Instead, they are focused on securing physical supply before prices move even higher. One of the most important indicators investors are now watching is the gold-to-silver ratio. Historically, this ratio has been used by traders to determine whether gold or silver is undervalued compared to the other. When the ratio is extremely high, silver is considered cheap relative to gold. When the ratio falls sharply, silver is outperforming. Right now, the ratio has been collapsing lower as silver massively outpaces gold. Some traders believe that if the ratio falls below 50, it could trigger another wave of silver buying. Others think a move below 40 or even 30 would signal a historic revaluation of the metal itself. The backdrop to all of this is a global inflation problem that refuses to disappear. Fresh inflation data shocked markets this week after consumer prices rose far more than expected. Consumer inflation climbed to 3.8% year over year, the highest level seen in years. Producer inflation numbers came in even hotter, jumping to 6%. That matters because producer prices often lead consumer prices higher in future months. In simple terms, companies are paying more to produce goods, and eventually those higher costs get passed down to ordinary consumers. Energy prices are playing a massive role in this inflation wave. Oil has been trading above $100 per barrel, and gasoline prices continue climbing in many regions around the world. Consumers are already feeling pressure at grocery stores, restaurants, and gas stations. Inflation is no longer something hidden in economic reports. People see it every day when they pay for essentials. And when inflation becomes persistent, investors typically look for assets that can preserve purchasing power. That is where precious metals come into the picture. However, there is another side to this story that makes silver's rally even more surprising. Rising inflation usually forces central banks to keep interest rates high or even raise them further. Higher rates tend to hurt precious metals because metals do not generate yield. Investors can earn interest from bonds or savings accounts instead. Recent market expectations now suggest that interest rate cuts may not happen anytime soon. In fact, some analysts are beginning to price in the possibility of future rate hikes instead of cuts. Under normal circumstances, that should have been negative for silver. Yet silver ignored all of it. That disconnect is exactly why traders believe a powerful structural shift may be underway in the market. One major factor driving this rally appears to be unprecedented physical demand coming from Asia. China has reportedly imported record amounts of silver this year, reaching levels never seen before. Charts circulating through financial media show an almost vertical spike in imports, dwarfing previous years. Some analysts are calling it the largest silver import wave in modern history. That raises an important question. Why would China suddenly begin stockpiling massive quantities of silver at record prices? Nations do not typically buy huge amounts of a commodity unless they expect future shortages, higher prices, or strategic importance. Silver is not just a precious metal. It is also an industrial metal critical for solar panels, electric vehicles, semiconductors, batteries, medical devices, and advanced electronics. As the global economy becomes increasingly dependent on technology and renewable energy infrastructure, silver demand continues rising rapidly. At the same time, mining supply has struggled to keep pace. Many silver mines are actually byproducts of lead, zinc, or copper mining operations. That means silver production cannot easily ramp up overnight, even if prices surge. If industrial demand keeps rising while governments and investors begin hoarding physical silver, the market could experience an extreme supply squeeze. This is where the situation becomes even more interesting. Reports have emerged suggesting that Russia's central bank may now be quietly accumulating silver reserves. Historically, central banks focused almost entirely on gold. Silver was largely ignored at the sovereign level for decades. If Russia is indeed building a silver reserve for the first time, it could represent the beginning of a major shift in how governments view the metal. Some analysts believe Russia may be preparing for a future monetary system less dependent on the US dollar. Others think silver's growing industrial importance makes it strategically valuable in an era of technological competition. Whatever the reason, if one major central bank starts accumulating silver, others may follow. That possibility is what truly has the market nervous, because unlike gold, the silver market is relatively small. It would not take enormous government purchases to dramatically impact global supply. If several nations began competing for physical silver at the same time, prices could move much higher very quickly. The situation in India is also adding another layer of complexity to the global precious metals market. India remains one of the world's largest buyers of gold and silver, and precious metals are deeply tied to cultural traditions, weddings, savings, and wealth preservation. Recently, Indian authorities sharply increased import tariffs on gold and silver from around 6% to approximately 15%. The goal appears to be defending the national currency by reducing imports and limiting pressure from rising commodity prices, but this move could create unintended consequences. Higher tariffs mean domestic precious metal prices in India will likely rise even faster. Some consumers may buy less, but others could rush to acquire metals before prices move even higher. There are also growing concerns about currency weakness in multiple countries around the world. When confidence in fiat currency declines, people naturally gravitate toward hard assets. Gold has historically been the primary safe haven, but silver's smaller market size means it can move much more violently when demand increases suddenly. Another factor driving excitement is the speed of silver's rise. Just 1 week earlier, silver was trading near $72 an ounce. Within days, it exploded toward $90. That kind of momentum attracts both institutional traders and retail investors looking to capitalize on rapid price movement. Momentum itself can become fuel for further gains because rising prices create headlines, headlines attract buyers, and buyers push prices even higher. Social media has amplified this frenzy dramatically. Financial influencers, market analysts, and retail traders are all discussing silver non-stop. Some believe $100 silver is now inevitable within days or weeks. Others are forecasting even more aggressive targets, including $150 or $200 silver in the months ahead. While those predictions may sound extreme, it is important to remember that commodity markets can become incredibly volatile during supply shortages or speculative manias. The psychology surrounding silver is changing rapidly. For years, many investors viewed it as an underperforming metal compared to stocks, real estate, or cryptocurrencies. Now suddenly, silver is outperforming nearly everything. That shift in perception matters because markets are often driven as much by narrative as by fundamentals. There is also increasing awareness that silver may still be historically undervalued relative to inflation. One interesting comparison often used by analysts is the purchasing power of silver over time. Decades ago, a single ounce of silver could buy several meals or everyday goods. Even today, despite massive currency inflation, silver still retains significant purchasing power compared to paper money. For example, analysts recently compared silver prices to the cost of a popular fast food meal over the past several decades. While food prices increased dramatically due to inflation, silver appreciated even more over long periods of time. That suggests precious metals continue functioning as long-term stores of value despite periods of volatility. At the same time, inflation itself may continue worsening. Governments around the world accumulated enormous debt over the past decade, and especially during recent crises. Servicing that debt becomes increasingly difficult when interest rates remain high. Many economists believe central banks will eventually be forced to print more money or restart stimulus measures to stabilize economies. If that happens, hard assets like silver and gold could benefit significantly. There is also concern that the current rally may expose weaknesses within the paper-silver market. Some analysts argue that far more paper contracts exist than actual physical silver available for delivery. If too many investors suddenly demand physical metal instead of paper exposure, the market could experience severe stress. This concern has existed for years, but rising industrial demand combined with sovereign accumulation could bring those fears back into focus. Investors are increasingly asking whether enough silver actually exists to satisfy future demand from industries, governments, and retail buyers simultaneously. Meanwhile, geopolitical tensions continue adding fuel to the fire. Global conflicts, trade disputes, sanctions, and growing distrust between major powers are encouraging countries to diversify reserves away from traditional financial systems. Gold has already benefited from this trend, but silver may now be entering the spotlight as well. Many traders are comparing today's silver market to previous historic rallies. The most famous example remains the 1980 silver spike, when prices briefly surged toward $50 an ounce during an extraordinary buying frenzy. Another major rally occurred in 2011 when silver nearly touched $50 again amid fears surrounding inflation, debt crises, and monetary instability. But today's environment may actually be more explosive because industrial demand is significantly larger now than in previous decades. The world simply uses far more silver today than it did during earlier bull markets. Solar energy expansion alone requires enormous amounts of silver for photovoltaic panels, and electric vehicle production continues accelerating globally. If supply growth cannot keep up, the market may face a structural deficit lasting years instead of months. That possibility is why some investors believe current prices could still be only the beginning. Still, not everyone is convinced this rally will continue uninterrupted. Silver has always been one of the most volatile major commodities. Sharp rallies are often followed by brutal corrections. Profit-taking, stronger economic data, or changes in monetary policy could easily trigger pullbacks along the way. Some analysts warn that speculative excitement may be getting overheated. Retail traders chasing momentum sometimes enter markets near temporary tops. Others point out that if global economic growth slows sharply, industrial demand for silver could weaken temporarily, yet even skeptics admit something unusual is happening. The combination of rising inflation, strong industrial demand, geopolitical uncertainty, sovereign buying, and tightening physical supply creates a very different environment from previous cycles. What happens next may depend largely on whether central banks truly begin viewing silver as a strategic reserve asset. If Russia's reported accumulation turns into a broader global trend, the implications for prices could be enormous. Central bank gold buying already reached record levels recently. A similar race for silver would place extraordinary pressure on an already tight market. For ordinary investors watching this unfold, Emotions are running high. Some fear they are missing out on the beginning of a once-in-a-generation move. Others worry the rally has already gone too far too fast. The truth is that no one knows exactly where prices go from here. Markets can remain irrational longer than expected in both directions. But one thing is clear: silver is no longer being ignored. The metal that spent years trading quietly beneath the shadow of gold has suddenly become the center of attention across global financial markets. Whether this move ultimately leads to $100 silver, $150 silver, or even higher prices remains uncertain. What is certain is that the world is beginning to rediscover silver's importance, not just as a precious metal, but as a strategic industrial resource in an increasingly unstable global economy. And if the current trend continues, the silver market we are seeing today may only be the beginning of a much larger story still unfolding in real time.